Ever wonder how a major becomes a major? Like, how did a management team manage to outwork and outsmart nearly an entire industry to become one of only a handful of names with multi million ounce production profiles? Barrick Mining's latest results kind of have us asking that question. Because despite the massive rise in the price of gold, the company has failed to beat their fourth quarter performance. And year over year, well, there's some room for improvement as well. Let's dive in. Barrick in the first quarter of 2025 recorded top-line revenue of $3.1 billion, in line with analyst estimates and a 14% improvement on a year-over-year basis from $2.7 billion. But versus the fourth quarter, revenue saw a decline of 14%, a trend that is prevalent throughout the results. Revenue was up off the back of gold sales of 751,000 ounces in Q1, which was actually a 17% decline from 910,000 ounces in the first quarter of last year, and a 22% decline from the 965,000 ounces sold in Q4. The average realized gold price, meanwhile, came in at $28.98 an ounce, a 40% improvement year over year alongside a 9% improvement quarter over quarter. Cost of sales, meanwhile, managed to decline, coming in at $1.8 billion versus $1.9 billion in the year-ago period and $2 billion in the fourth quarter, with the decline a result of the lower volumes Barrick experienced during the quarter. Net earnings improved from $295 million or 17 cents per share in the first quarter of last year to $474 million or 27 cents per share in the first quarter of this year. Earnings, however, were down by a whopping 52% from Q4, when Barrick posted net earnings of $996 million or 57 cents per share. On an adjusted basis, net earnings improved from $333 million or 19 cents per share to $603 million or 35 cents per share on a year-over-year basis, while still being down 24% from the $794 million or 46 cents per share posted in Q1. The figure represents a strong beat over analyst expectations of 30 cents per share in earnings. Adjusted EBITDA, meanwhile, improved 50% year over year, going from $907 million to $1.4 billion. In terms of cash flows, net cash provided by operating activities was up 39% year over year from $760 million to $1.2 billion. While net cash provided by operating activities margins were the only bright spot in terms of financial performance improvements versus the fourth quarter, with that margin figure rising to 39% in Q1 versus 38% in Q4 and 28% in Q1 of last year. Free cash flow, meanwhile, came in at $375 million versus just $32 million last year and $501 million last quarter. Lastly, looking to the balance sheet, Barrick ended the quarter with cash and cash equivalents of $4.1 billion and debt of $4.7 billion, leading to a net debt position of $623 million, which is an improvement over the $655 million in net debt posted as of year-end 2024. Share buybacks during the quarter amounted to $143 million, while Barrick declared a dividend of 10 cents per share for the quarter. Moving to the production data, Barrick in the fourth quarter produced 758,000 ounces of gold, which was down year over year from 940,000 ounces and down quarter over quarter from 1.1 billion. The production shortfall largely comes from two evidently problematic operations. The Nevada Gold Mines joint venture with Newmont saw attributable ounces decline by over 100,000 ounces versus the fourth quarter, a 23% decline, with the decline blamed on planned maintenance. While Lulu Gunkodo saw production fall by an even larger 138,000 ounces, an 88% decline, with operations now suspended through to 2028. However, the issue was more widespread than that, with production only improving at 1 of 10 operations in Barrick's portfolio versus the fourth quarter, with Pro-Guerra seeing production improve from 13,000 to 21,000 ounces. Copper production, meanwhile, totaled 44,000 tons, up year over year from 40,000 tons, but down from the 64,000 tons produced in the fourth quarter. Barrick has said both copper and gold production were in line with guidance, despite the quarter-over-quarter declines. And while production was down, costing was up. Gold total cash costs increased from $10.51 to $12.20 an ounce on a year-over-year basis, while also increasing from $10.46 in the fourth quarter. All-in sustaining costs, meanwhile, ballooned to $17.75 an ounce, a jump of 22% year-over-year from $14.74 an ounce in Q1 of 2024, while also climbing from $14.51 in the fourth quarter. While Barrick provided no commentary on it, the jump is related to the fall in production while cost structures remained the same. Copper was a different story, however, with Barrick seeing cash costs on a per pound basis fall from $2.40 in the year-ago period to $2.25 in Q1 of 2025, although they were still up from $2.04 in the fourth quarter. All-in sustaining costs, meanwhile, fell to $3.06 a pound, an improvement over the $3.07 a pound figure posted in the fourth quarter and $3.59 a pound in Q1 of 2024. Barrick so far has maintained guidance, which called for total attributable production of between 3.15 and 3.5 million ounces of gold this year and 200 to 230,000 tons of copper. However, both figures look to be in jeopardy if current production levels persist. Costing is also being called into question following the Q1 results, with cash costs for gold expected to be between $10.50 and $11.30 an ounce, and all-in sustaining costs to be in a range of $14.60 to $15.60 an ounce, both metrics for which Q1 costing exceeded full-year guidance. Copper costing is looking slightly more realistic, although cost still came in above the guidance range for cash costs, with guidance calling for cash costs of between $1.80 and $2.10 a pound. All-in sustaining costs have fared better in terms of guidance, with guidance calling for AISC of $2.80 to $3.10 a pound. All right, so let's wrap it up. If we're being frank, it wasn't a good quarter for Barrick, especially at a time when the gold market is looking for a major to lead the charge in moving market caps higher off the back of strong performances. Instead, we got cratering production and skyrocketing costs. All while Barrick tries to gaslight us by talking about big progress on strategic growth objectives and significant headway on the long-term strategy. Instead of discussing the implosion of performance at Nevada gold mines, Barrick instead talked about Reko Diq and Lumwana, two projects where they expect to grow production towards the end of the decade. So much for that. Perhaps that's why they're changing their name from Barrick Gold to Barrick Mining. Oh, and we probably should mention that Reko Diq is found in Pakistan, which has yet another war brewing with India. It's hard to see a silver lining there. Anyways, here's hoping that some of the other big names in the industry have more positive results for the market to chew on, while gold again rallies towards $3,500. All right, everybody, thanks for watching. We've got lots of earnings videos for you on our channel. If there's stories you want us to cover, please let us know in the comment section. Also, if you haven't already, please smash that like button, subscribe, and ring that notification bell. All right, everybody, thanks for watching.